Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the top business stories. Hours after the Union Cabinet approved disinvestment of Hindustan Zinc, Business Today TV gets the first reaction from Vedanta Chairman Anil Agarwal. Says he's not interested in buying the stake, reveals his ambitious multi-billion-dollar plans to set up a semiconductor hub in India. Sensex jumps over 500 points to end atop 54,000. Nifty declines over 5% to post worst series since September 2020. All sectoral indices decline in the May series. Indigo surges 10% on pickup in business, while healthy performance and a bonus aids Torrent Pharma. But BPCL skids on missing street expectation, and meanwhile Bata jumps on a good Q4. Infosys CEO Salil Parekh gets 88% pay hike. Salary jumps from 42 crores to 79 crores per annum. Parekh has become one of India's highest paid executives. It's the end of an era at Twitter. Co-founder Jack Dorsey further distances himself from the company by stepping down from the board of directors, even as the company braves an acquisition by Elon Musk. The annual mega corporate mela comes to an end at Davos. We at Business Today TV got you the stalwarts from the business world. We had an exclusive conversation with the man who leads one of India's largest conglomerates, Kumar Birla. The chairman of Aditya Birla Group talks to us about the wholesome deal and his massive capex and fusion plans. Listen in.
One of the key drivers of growth for India from here on is how the marquee names of India Inc. view the India story. Will the old business houses which have defined corporate India so far want to plow back into the India story, or would they rather take their money abroad and be part of the global story? Joining us now for perspective on where his group is at this moment, the different factors playing themselves out domestically and geopolitically, is the head of the Aditya Birla Group, Kumar Birla. Thank you so much, sir, and it's fantastic to have you. Thank you. It's great to have you with us at the India Today Studio. I want to understand from you your macro view on the economy from the perspective of the Aditya Birla Group, because it seemed like India was poised for a takeoff on the back of the pandemic. And then Russia, Ukraine happened, we're seeing inflation, we're seeing interest rates go up. Is that dampening spirits about the bounce back, and to what extent?
So I can speak for myself, Rahul. I think that inflation is obviously a global phenomenon, right? After what's happening with Ukraine and Russia, energy prices are going up, inflation is going up, commodity prices, metal prices, food shortage could be a real problem, unemployment. So I don't think inflation is obviously not an issue that's specific to us. I think that the government actually seems to be, very quick to take action to contain inflation. The fundamentals remain very much the same as far as we're concerned. We would look at structural, sectoral trends, multi-decadal trends, because that's the kind of time horizon that we have in mind when we invest. And I think India looks very good. I remain very positive about India. It is the fastest growing economy in the world, something that people here in Davos also recognize. It doesn't go unnoticed. We have about $7 billion of capex, $7 billion of capex announced and under implementation in India. We also have about $3 billion announced and again underway overseas, largely in Novelis. So I think it's very exciting times. The fact that we are very low on debt, hardly have debt, and have strong cash flows, gives us that extra sort of power and extra headroom. So yeah, on India, I remain very positive. I think that we really are shining out vis-a-vis the rest of the global economies.
Now, there are two theories that are playing themselves out at this time, and I'm curious to know what you think. One is that we're poised for a 5-year investment cycle because of cuts in corporate tax, because of pent-up demand, because of the fact that there were 2 no-show years because of the pandemic, that this is India's opportunity and we're set for takeoff. The other is that given the lingering geopolitical uncertainty, No one knows when the war will end. No one knows what may happen next. Could there, God forbid, be nuclear escalation? Therefore, industrialists and corporate houses will hold back, see how things play themselves out before taking decisions to invest. How do you see this?
So, you know, these macro issues will always be there. I mean, you know, we've been through many macro situations. We had the US-China trade war. We had the tsunami in Japan. We had floods in Thailand. So obviously, a nuclear story is a much bigger and you know, more impactful one. But that's not new. I mean, there's nothing new that really could practically happen there. The war is a matter of worry. And obviously, interest rates will go up, not just here in India, but across the world. 9 central banks, if I remember right, have increased rates in the last 4 weeks. And the Fed's increase is the highest it's been in the last 20 years. So that's very telling. I don't see how that dampens the India story, though. In fact, I think it makes the India story even stronger.
In what way?
Because you have macros that are very much in place. I think that some of the steps the government is taking, like I was saying, have to be seen in the context that we are in today. You know, demand is good. Costs have gone up because of, you know, fuel costs going up globally. Cost of commodities going up for people for whom it's an input. So our margins have come down in Q4 almost across the board. But the fundamentals of most of the businesses and India as a growth story, to me, remains pretty much unchanged.
Mm-hmm. I'm curious to understand how you see the group evolve in the post-pandemic era, because it's said that these 2 years have changed everything. So between the vision that you had for the Aditya Birla Group just before the pandemic, how have you seen that vision evolve, and where do you hope to take the group in the next 2 years?
So I think the vision remains pretty much the same. It's about being a leader in the sector that we are in, which you know, has only sort of you know, in the last 2 years we've only bolstered our position as leaders. Leaders being defined as number 1 or number 2. We focus very much on cash flows. We have very strong cash generating businesses. I think I was saying that debt at a group level, debt to EBITDA is less than 1. So huge headroom for growth. I think the one big change is going to be on technology, not just in digital, but also in the sense of, let's say, the whole supply chain part of things. Right from the sort of point where my supplier ships his, you know, my raw material to the time that I sell to my customer. The ideal situation would be to have a see-through across the entire part of the value chain. That's going to have an impact, and that's going to take a lot of reskilling and learning new skills.
Do you want to build
a lot of technology
and explain how? Because one of the big changes that we are seeing is that supply chains are moving from just in time to just in case, and all kinds of eventualities are now being factored in. Resilience is the key driving theme about ensuring that supply chains stay resilient. So how are you trying to register that?
So very broadly, I mean, it'll, you know, it depends from business to business, but I think that we use JIT so far to, you know, control costs, to improve efficiencies. Now it's more about reliability, it's more about resilience. So, you know, you would need to keep some buffer stock. To that extent, your costs will go up at a granular level. But I think the way to keep costs down is going to be through technology. It's going to be a lot of stuff. It could be IoT, it will be digitization, it could be sensors, it could be drones, all of that put together. So you require, you know, a whole lot of people, maybe very young people who are digitally native and who can put this in place for all of our businesses.
Does this rapid march of technology unnerve you at times, that as a legacy business group, the speed at which you're able to move versus some of these much wanted startups that can move far more agile and can get things done faster? So how do you see this concern about startups setting the pace and as a legacy business house trying to keep up with those same transformations?
No, I don't think we're trying to keep up with anyone. I think that a startup has its own advantages, as does a traditional business house like us. I think that once we focus on a particular issue or a particular, a cause, so to speak, we are very quick to move on it. So it doesn't mean that big is slow. I think that we've shown a lot of aggression, both internally in our in the way we run our businesses, also externally in the way we've grown. I'm not comparing with startups because they're very unlike situations. I'm just saying that for us, for large businesses, I think adopting technology with greater depth, especially on the side of the whole supply chain part of things, is going to be a whole new area of focus.
Competition seems to be heating up in some of your businesses. We've seen the Adani Group come in, pick up Holcim. How does that impact your plans for what you're doing? And are you looking now behind your shoulder, and how is that playing out for you?
Not really. I mean, our story, sort of remains unchanged. If we would have loved to have those assets, but at a much lower value. We have other more value accretive options to grow in the cement business. These are existing assets. It's not like someone has created new assets. So I don't see how it changes competitive dynamics as far as we're concerned.
And your hopes to strengthen and consolidate your position in the businesses where you are entrenched, where you're seeing competition trying to creep in and possibly try and push you?
We're pretty used to competition. I mean, we are the group that went overseas in the early 70s. So having been exposed to global competition then, it's kind of percolated down over the years. So competition is not an issue, and I think we're pretty much focused on running our own race, so to speak. Competition is always a good thing in many ways.
Let's talk a bit about your investments. There was the announcement about the investment into paints, where you want to double the investments that you've made, focus on building capex. Can you talk us through some of the key sectors that you want to build on and your roadmap for that?
So, I mean, I think broadly remains the same. All the businesses that we are in, so whether it's metals, financial services, fashion retail, cement, specialty chemicals, I think there's tremendous potential to grow in all of these. And given the fact that our balance sheets are so strong, that gives us, that extra push to be able to grow even faster and more aggressively. And I think across the group, practically every business is poised to take the next big steps going forward. I think paints is a very interesting sector. We have a right to win, I believe, because it overlaps with cement and white cement, where we have a very entrenched position. That's a very interesting play for us. Like I've said, in the next 5 years, we want to be a very strong second player in the paints business.
Do you see tech possibly providing some kind of a push over there in terms of using tech to power some of these new business plans that you have?
So tech is pretty much a part of every business plan now. You've got to just figure how tech plays a differentiating role in each business. It's different for paints as it would be for financial services. But I think technology is a very sort of integral part of any business today.
So you made a big play in the fashion space, and I've always wondered, what is it that draws you, given the fact that a lot of the designers that you're now working with couldn't achieve scale? So what is it that you hope to achieve which they couldn't do earlier, and what is it about just the whole sector that excites you?
So the designer acquisitions are quite a small part of
Sure.
ABFRL actually. It's actually in a broader sense a play on ethnic, which we believe is, has a strong growth story in India in particular. I think fashion retail, we've been in it for the longest time. We're the largest player in our segments. You just look at demography, you look at income groups going up, income levels going up, aspirational value of fashion, clothing, as you might call it. It's just a high growth sector that we understand well.
And just as it so happens, there's also consolidation happening in the fashion sector, with you picking up a lot of the marquee designers and the Reliance Group doing the same. And it seems to be becoming, in this sector, in initially quite an unanticipated fashion, once again Birla versus Reliance.
Not really. I don't think I'm seeing it that way at all. I think we just basically, it's the sector that is attractive. So any large player in that sort of industry would have sensed that by now.
Okay, so let's step out of what's happening in India and talk a bit about what you're picking up about India in your travels and in all the interactions that you're having with people who are looking at India globally.
So very positive views on India. I haven't heard anyone saying that we don't want to invest in India. I think that the fact that China has been under lockdown, a large part of China, 75% of the provinces, especially Shanghai, in terms of contribution to GDP of China, have been shut down for a long time, and therefore it shakes investors' confidence. And I think that they see India as a sort of natural option. I didn't hear about any major concerns that people have about investing in India, from private equity to FDI to FII. Most people have sector preferences, but a positive view on the country. So I think that this is really a good time for us to try and leap forward, given that we are standing out just now.
From a policy perspective, in terms of being able to capitalize on the growing thinking in boardrooms globally in MNCs that there's a need to have a China plus one supply chain now, do you think India is doing as much as it should to try and capitalize on that opportunity? We've seen Vietnam be a big beneficiary, we've seen textiles Bangladesh be a big beneficiary. What more would you like to see the government do, and what do you make of what's been done so far?
I think that will have to be a sector by sector sort of a reply. But I think the role of government is to create an enabling environment, and policy making is part of that. I'm not sure if there is something that the government needs to do in specific sectors. I wouldn't know about that. But like I said, I don't hear any concerns from anyone here saying they don't want to invest in India, or there's any apprehension that they have about investing in India. So really, it's a good time for us, and I think we need to capitalize on it.
But that's the key point, capitalize on it, because as many Davos veterans would say, it's been a good time for a long time, and ye apna time kab aayega is the question, because the pandemic happened, now these global tensions, so a lot of being poised for takeoff, but just actually taking off. Is it just...
So I think we've seen a lot of inflows, especially on the private equity side. I think what we want to see now is inflows on the FDI side, which also has picked up. Like I said, I think that this is a time when we are actually standing out, because all the other economies, whether it's Europe, whether it's the US, are struggling with their own problems to one extent or the other. I think that these investors have clear preferences in terms of which sectors, and I think given the right opportunities, they're quite happy to come and invest in India.
What are the sectors you're most bullish on?
I'm bullish about all the sectors that we're in.
No, but and growth sectors in addition to your existing lines of businesses?
So there are several. I think digital has some nice opportunities. Of course, it's a whole new ball game, and we're still trying to figure out what we want to do in the sector, and how best we should play in the sector. But obviously, some very, very enterprising work happening there.
Mm-hmm. As I conclude, I want your sense of how the week for you here has been, and in terms of your expansion plans globally. You've made announcements of investments in the United States and elsewhere. How significant is that? Because you're one of the groups that's actually succeeded abroad, and how do you see that play itself out over the next few years?
So it's been a very eventful few days here. Some very intellectually stimulating conversations with very, very interesting people who you definitely don't get to meet under one roof over 2 or 3 days. So it's time really well spent. We're making pretty substantial investments overseas. Novelis recently announced a $2.5 billion expansion of a new capacity, actually, a greenfield capacity in aluminum rolling in Alabama for, it will start implementing that and commission it in the next 3 years. Carbon Black has their own expansion plans. So we're looking at an expansion of about $3-4 billion overseas. We have the advantage of having been overseas for a long time, and therefore having a comfort of investing in those economies. So I think, yeah, good time, very exciting times ahead for us.
As you look back at the pandemic, what was your biggest learning?
I think it's people who make the difference, and it's the commitment that people have to the organization that really makes a difference. And I think we are very blessed to have a very committed set of people across the group, across the businesses.
Kumar and Mangalam Birla, you've spoken a bit about the India story, about your plans for India, as also your plans globally and the sectors that you're most excited about. We appreciate you taking our time and joining us here at the India Today studio at Davos. Thank you so much.
Thanks, sir.
Thank you.
Thanks.
While the government has decided to sell its entire stake in Hindustan Zinc, Vedanta Chairman Anil Agarwal says he's not interested in buying the stake. In an exclusive conversation with Business Today TV, the Vedanta Chairman also reveals his ambitious multi-billion-dollar plans to set up a semiconductor hub in India. Listen in to an excerpt of this conversation.
I want a quick reaction on the decision which we are being told has been taken by the Union Cabinet, which is to sell its residual stake in Hindustan Zinc. What is your comment about that, and are you a buyer?
You know, government should not be in a business. That's what the decision. And they hold on to this for 15 years. And, you know, for every decision we have to go to the government. And we could have taken this company far more ahead, and we couldn't take because government was there and their compulsion because they are director. So it's the right decision they have taken. I'm not a buyer, and there'll be so many buyers because I'm not an investor. I want more people to make money out of it, and there are so many individuals, equity fund, who will be very, very keen to buy this, and they're looking forward this kind of opportunity to come, and government will be a win-win situation.
Mr. Agarwal, since we are in Davos, I can't let you go without asking you a couple of questions about Vedanta's plans. I, at the very start, spoke about that huge bet that you are placing, and for the benefit of the viewer, if you could explain what we all as analysts and reporters know are three big bets: to ramp up your existing businesses. The second is to go after some stressed assets and government disinvestment companies. And the third and the bigger bet is on technology. Explain these three bets and where do you stand, and if you could give us more details of the semiconductor plan.
Yeah, we have a technology company, Sterlite Technology. We are in a glass business, very keen to reach fiber to the home. Fiber will take our country very different level. So we are the largest producer of the optical fiber, and we'll take it to these fiber to the home. We are creating software system integration. We are the fourth largest to produce display glass, which is used for cell phone, laptop, TVs. $17 billion imports are there, and we acquired the company in Japan, Taiwan, Korea. We are producing. We are bringing that special glass company here, which is called Fab, and we are going to produce here. So cluster, never thought me, how my company can benefit to thousands of others. That was always my dream. If this Fab can be made in India, you don't have to buy the branded cell phone. People can develop. So that was one plan we have.
And that's where we leave it on the show today. Thanks so much for watching.